Mines and Money London. Welcome, ladies and gentlemen. Commodity TV here for you, and my first interview partner this Monday morning is Dev Randhawa, the President and CEO of Fission Uranium. You remember the fantastic uranium explorer out of Saskatchewan. Good morning, Dev.
Well, thank you for having me.
Yeah, thanks for taking the time. And we both did a lot of interviews together already, your company had phenomenal drill results. You had great resources already. So as we spoke the last time, I think in January this year, what happened since then?
Well, I think as a company, we redid our pre-feasibility for just the underground only. Before we were looking at an open pit scenario, and they gave us an option for underground. This was purely underground. And it's been, I think it's been very positive news. May not reflect on the stock price, but very positive fundamentally. One, we will certainly save a year in production. The pit would have to be built seasonally, so now by going underground, we don't have to do that. That will save us a year.
Wow.
The other thing is, the pit would also cost quite a bit more money. So we saved about $300 million, 20% on the project.
Whoa.
So it'd be quicker, cheaper. And finally, it leaves less of a footprint by going underground. So I think...
Does this help with the permitting also?
It does help with the permitting, but really it's about having a smaller footprint too. Yeah. I mean, the basin has seen lots of open pits, and they've worked very well. But now that we're unique in that bulk of our uranium is very close to surface. Remember, it's the only project that's even close to surface. Our competitors are 400 meters down to 1,000 meters. This is 50 meters from surface. So it's an underground, but a very shallow underground mine. And that's why, because the bulk of the uranium sits in a big blob at the top, we'll be able to get it out pretty quickly, and that's why the rate of return is in less than 1.5 years.
Wow, that's fantastic.
Get our money back out, yeah.
Fantastic. So you said $300 million less of capex. So what we are talking now about, 800-900 million?
Oh no, it's from 1.5 to 1.2.
1.2. Ah, okay, good, good.
It's a big mine, 150 million pounds. So
that's right. Yeah. And what would be the annual run rate then?
Well, I mean, the cost was just over $7, and I think open pit was $650. So very little increase in cost. Now, you're not going to get 100% of the ore out because that's what open pit does, takes everything out. But you get most of the ore out. So the cost is a little bit higher, but you're saving so much money and much quicker. And we do think, certainly we're owned 20% by the Chinese government, as you know, through an entity called CGN Mining. What we have learned is that we expect the big need for uranium to be in the mid-20s, from 23 to 26. So it's perfectly timed to be in production then.
Fantastic. And what do you think might be then the annual production, pound-wise?
That's obviously the time of the price.
Too early?
It's too well. I think we can do 5 to 7, 8 million.
Okay,
but I think the real question is what the market will handle. You know, some people have talked about doing a lot more, but I think you usually ramp up slowly. You know, and then so this early first year it won't be as much, but you know we're going to be sensitive to the market as well. Yeah, you can't.
Absolutely.
You know, depends on how much we need. If we need a lot, well, then we'll increase it.
Yeah. As we saw in the last, I would say, probably 6-8 days, we saw a move all of a sudden over $26 per pound uranium.
Yes.
Do you think this might be a little bit of a start now? Because I heard that the US are now sanctioned Rosatom because of Iran. And all of a sudden, a lot of people think, this market is really getting tight now. Because Kazatomprom cut, Cameco cut, everybody cut and we are running out of mine life, right?
Yes.
In the existing mine. So what's your take on that?
Well, we've been living off our secondary supply and, et cetera for some time. We need almost 200 million pounds, only producing about 150. So you got 50 million gap. So we've been using inventory, SWU, and however, what puzzles me is why utilities over £1 billion over the next 8 years is needed. $1 billion is needed over the next 8 years, but they've got no plans. So I think what I've learned about this industry is it usually takes a black swan event, and maybe it is political. People saying, well, hang on, if we can't buy uranium from Kazatomprom, who are we going to buy it from? Obviously, Canada is a good example, and the United States is a good example. But I think, but I don't see uranium. The only mine that I know that can come back online quickly outside of Kazatomprom would be MacArthur. and so with it, so I see Cigar Lake continuing on. It'll be running out in the next 5-6 years. That's the only one they can really turn on. From what I've heard, that's not going to turn on until it's $50, $60. So, and most of the mines in the U.S. aren't really economic till you almost hit 70.
Yeah.
That's at least according to Cameco.
Yeah.
So I think, I don't know what will cause it, but it is very positive in the last while. We've had this overhanging issue about the U.S. market now with its Petition 232, where a couple of companies felt America shouldn't be so reliant on uranium from Kazatomprom because they're friends of Kazakhstan, because they're friends of Russia, and so they should have their own. So that kind of put a cloud over it all year. But I think that's slowly going away because people realize Trump's not going to slap quotas and all these things on them. They might do other things to get uranium, the industry working better.
Yeah.
So I think it's been hanging it. So yes, it's been a 6-month high. We're excited to see it over 26, and we'll see where it goes. But yes, fundamentally, we're doing better, but the stock is lower because today's money is very momentum driven. So it tends to move here, whether it's marijuana or this or that. So it moves around a lot. But I think investors who are contrarian investors, where most of the money is made, when it turns, people are going to miss out on the early return. So it's a good time to buy these stocks, especially uranium, projects like ours, which will be economic.
Absolutely. Yeah, and also you are financed, you have the money, you have strong partners. I mean, it's
we
also
have strong
important.
partners. We do. We have we only have about 6-8 million left, depending on how we stretch it out. But we will have to raise money. But we're looking at some other instruments other than equity. But I think that we have enough runway for a year, and I do think we'll see something happen this year with hopefully a strategic partner, and we'll see what happens. But these stocks, what I know about uranium stocks, they move like, as we in Canada, hockey stick. They don't move up slow; they just jump up. So and the utilities are not. I don't think they're being proactive enough. And so there's an opportunity investors now.
Yeah, I feel a little bit reminded on 2006, 2007.
Yes.
And as I think history quite often repeats, only for a different reason.
Right.
And to me, it looks like the same storm is now coming up with supply going down, demand surely going up. And I mean, the biggest nightmare for somebody who has a nuclear power plant is to have no fuel, right?
That's right.
And so
it's a nightmare.
They need the stuff.
Yeah, it's a very small part of running a nuclear plant. So in some ways, the utilities can wait and pay 100.
Yeah.
It won't really impact their bottom line. For us, it changes our life overnight.
Absolutely.
These stocks that are trading at 30 cents are going to be close to $3 that happens.
Yeah, that's right.
So it's the leverage is certainly there.
Fantastic. Last question, what's the work plan for next year? What do you want to do?
Well, it depends on funding. We're going to continue towards moving to a full feasibility study, and unless the market's really turned, that's all we will do is work towards our feasibility. If we have a lot more money, the market moves up, uranium prices, we might do some more exploration. There's lots of work to be done, but we've learned very painfully that over the last couple of years, you can put out great drill results, stocks go down. Because people aren't paying attention.
It's the nature of the market these days.
I think that's a problem with so much money is so passive. People don't make their own decisions anymore. Computers are making it.
Yeah, the robo-advisor.
Yeah, exactly. Robo-advisor,
Jesus. Horrible. Well, Dev, thank you very much. I wish you already Merry Christmas. All the best for next year.
Thank you.
Good 2020. And I would say, may the uranium force be with us.
Absolutely. Thank you so much for your time.
Thank you very much, Dev. Thank you. Great.
Thank you.
Yeah, ladies and gentlemen, there was Dev Randhawa, the President and CEO of Fission Uranium. And you heard it, a lot of good things are going on with the company. There was already a pre-feasibility study done. Less $300 million of capex. They are going underground now only. And I think the company is doing the right things, despite the market is still, I would call horrible. But this might change quite soon because, as said, in 2020, a lot of utilities, they really have to change their thinking and they really have to do something here. So stay tuned. Check out the company. Thanks for watching us and bye-bye from London.